Hey, what's going on, guys? So we're going to be getting over the weekly scan. We're past the April OPEX now, obviously. We obviously have the potential here in the market for a lot of headlines hitting. We're also getting a very spiked VIX as of lately that is obviously cooling off here as we move our way lower down into a back test of like 28.30. We have a gap fill that extends from VIX on 25 all the way down to 21.50. So vol is definitely going to have to cool off a little bit here for the market to see a little bit of upside. But I do think that happens. Most of the volume is coming off of the lows. We're pulling back from a 15% retracement. We're consolidating above equilibrium. If you guys pull fibs from low to high, this is also an unfilled gap. And right here, we also do have a phantom print where they have been layering sells within the dark pool. So if you guys take a look at the dark pool, there's orders coming in off of like 538, and as well there we also have a misprint on that daily candle, and that is a phantom print where price never actually traded to that. And you guys can see on the daily chart, it shows a wick trading all the way up to 538 here on Wednesday, around that gap fill. And you guys go into the Wednesday action, and you can see how there was no action all the way up into that spot. So I feel like they're targeting into these highs here, these pre-market highs. The session of pre-market here on Wednesday, it's around 538. Like I said, if you guys take off the extended hours, you can see the gap sitting around there. As far as the equity market goes, I would say that we obviously have well-supplied vol and dispersion happening into some of these defensive sectors, right? So we go over into like your energy, very big time rips within energy. It's more of a relief as of right now, but as we know, we've been talking a lot about these certain names that are trying to put in higher lows on very big time frames, like Oxy weekly. This just tapped into the 618. We also have a lot of these other names like ZOM that are taking out previous supports and then reclaiming those supports. We have names like CVX, kind of the same deal with ZOM. It's kind of just pushing into the support after the market, the whole entire market corrected from the highs, right? Every area of the market recorrected. So you're seeing a lot of these really nice strong moves that are a little bit more on the outlier side, while tech is trying to kind of make its decision. I do think we see reversion one more time within tech, and then after April, or I'm sorry, May OPEX, which is May 16th, that's whenever we're going to start seeing the redistribution happening, in my opinion. Which would give us a nice little depiction on kind of how the chart can play out here. Within the NASDAQ and within the S&P, we're holding the progression gaps here from the April 3rd to April 4th gap. So we go over into each of these charts, and we can see how these were previous resistances that led for obviously continuations through record day, lots of volume, and most of the volume is coming off the lows, April 7th and April 9th. April 9th was the continuation from the April 7th bullish signal, actually. So we got the gap rejection, right? So we could see that as kind of like a resistance, and then we push through. We covered the body as far as where we push through from. We're trading within discount of this candle, right? So we're in equilibrium, and even from the swing low from April 7th, we're in equilibrium as well. So all we really are looking for here, guys, is continuation off of a break and base and a hold of like 438 on the NASDAQ. If we go over to the S&P, it would be around last week's lows, right? So it'd be around 520 and sub 520. If we could sweep 520, that would be a fantastic sign. Obviously, if we were to sweep 120, and that could result in a really nice upside trade. As far as everything else goes within the equity market, I'm looking at a couple names that look really nice here. Google just had a really nice soak on that supply that was dumped here on the negative report. Not, what am I saying? Not report. The negative news that came out, it was a really nasty sell-off that then led to a very large buyer off the 618 down here, as you guys can see. Very big volume, big wick. And then subsequently to that, we had two very large volume candles with absolutely no further downside continuation, right? And then the daily candle actually closed its buyer bid above the progression gap right around here at 151.11. These progression gaps are not just going to be respected here on like a 5 or a 15. You have to look at the daily chart, really start to understand that not everything's going to be perfect. Things are going to pull back. They're going to pull back in a discount. They're going to find their higher lows. And we have a lot of those tech names within their higher lows within discount. Nvidia was the name that was driving the sell-off, right? And this was from April 15th into April 16th, right? And there was nothing bearish about the market on April 15th into the 16th other than the Nvidia headline, right? And all this was really doing was it was pulling back into this major misprint on the daily, which is a phantom print down towards 99.15. If you guys go into the 15-minute, you're able to see how on that trading day, we only traded down to 103, right? So these phantom prints, they're always heavily respected, and they always are met kind of close to whenever you start seeing them, right? Within like 2 weeks. So um, this is a really, really nice chart in my opinion, just to see what we do sub 100. I would really like to see like another bid on a new low, right? That takes out these two daily lows, maybe pushes towards the phantom print. Maybe we find a higher low in the daily chart, and then we can continue our way back higher for one more rally in the market. Maybe this closes its gap up towards 112 before further downside. Within the NASDAQ, I would be looking for like 458. That can extend all the way up into this gap fill on the daily at 466, and then eventually this could all reach 476 on the NASDAQ. You go over to the S&P, and this obviously has a lot of potential for, in my opinion, 550. This can eventually reach all the way up into 565. I do think we're going to get a decent looking move, but I think that we kind of need to make that move very clear early before May OPEX, right? And then after we get through that window, that's whenever I'd be looking at the redistribution within some of these gaps. With the amount of volume coming off the lows, with the really nice, 6-day inside bar consolidation happening within this candle here on much lower volume, it's going to be really hard for me to commit to a short, especially for the reasoning of like we have a lot of negative headlines out of the way. We have more positive headlines, in my opinion, for potential of obviously a markup, right? May OPEX in the positioning building within May OPEX in that chain on May 16th. It's actually dealers are long. I'll have to double check the chain as we move forward here, but it was a delta negative chain here, and we still have a little tiny window of strength opportunity leading into the new month and the 2 weeks leading into that May 16th window. So I would say that obviously May's seasonally, like on a seasonality chart, it's actually typically weak. I'm not really seeing too many signs of weakness, especially given context to the charts and whatnot. This is not really a reason there's really no reason to short, right? I mean, obviously we have invalidation points within QQQ and SPY, but as of right now, guys, I mean, this is all just holding its progression. It's all properly basing and building out very lucrative structure for an options trade. Basically, what we would be looking for would be a failure of all of this support generated from the 10th to the 11th, all the way stretching through the 16th and the 17th, which is the last day of last week. If this were to break and base beneath this spot, it would obviously head back for like 505, right? Potentially all the way down into like the 490s to like 500. But if we can properly base this and hold up very, very strongly, and if you guys take a look at the 4-hour, if we can hold a lot of this structure on the 4-hour, this is going to be a fantastic move for the upside to then reach, like I said, into the 550s to maybe 565. And then that's where I think the rally kind of stalls off from. And that would make a lot of sense in terms of a redistribution. We ever so slightly from lows to highs of the bigger perspective of the daily chart tap equilibrium off of 547.66, which is where that gap remains unfilled from. And that's almost like a double gap area on the chart, right? So I'm not saying that this is all just going to be, there technically is a retracement within the market that was happening from, you know, we created our leg lower, we're pushing back up, we made that 0.50 retracement technically within the S&P. There's also a double gap at that S&P's retracement from 548 all the way up into, and then we have another gap extending all the way up into 565. So it's very hard for me to open the short side trade right now, just from a risk to reward perspective. It's not always about a directional read. Everyone thinks, oh, well, where's the market going? Because I need to be right. I need to be right. I need to be right. You do need to be right, but we're in an environment right now where what are you really looking at in terms of how could you short down here? What is your reward? What is your target? And what is your risk level that is reliable? That is really basing itself off of structure and key invalidation of what's going on from the lower end, right? What's telling you that, oh, bears are fully in control here? It's very hard to say bears are in control on a smaller perspective. Could it work out? It could work out for like a trading day or two, but I'm talking like bigger perspective of like looking for that big win that has good risk to reward behind it, where you're risking less to make more, and you have a R multiple that is very, very good, and it's very, very, very like easy. I don't know what the word is, but very easy to explain, right? Because I feel like the short side trade right now is just it's nothing that I really want to deal with. It's not. I mean, guys. I short. You got to remember, I shorted this thing on the distribution throughout all of here, right? And then we came through in the tariffs. That was a very, very, very disgusting markdown for 3 days on end here. And then that's where I kind of took my risk off on the short side, leading into this tariff event, which does suck, but I did very well throughout this whole entire leg lower, throughout the lower highs, throughout everywhere, right? So there's no reasoning as to why I should even be shorting around here, right? If I didn't really like the short around here or throughout this continuation, and I only preferred to trade the long side on the rebound from this really nasty capitulation, then I'm not looking short, right? The risk to reward is bad. There's no edge, right? So yeah, that's basically all I'm really looking at, guys. Obviously, we have some of these setups that are really, really nice. Tesla, we just had news this weekend about like their Model Y, I believe. I can't really remember everything about the headline. I'll have to check it out again. But if this were to get a gap down into the earnings and then maybe earnings is flat and that's an available flush trade for us to take, then I'd be very interested in that. Obviously, some of these other names are kind of in no man's land or they don't really look too great just yet. I don't hate the look on anything, but I don't love the look on everything. That's why I'm kind of sticking to the indexes. We go through a lot of the sectors, and we're getting the risk-off defensive sectors obviously catching a bid here on a flat market, right? We have XLE catching a bid. That gave up a little bit of it, right? And then we have XLP, the consumer fund, right? So a lot of these, they don't look the best either, like banks. And I'm very aware that I could be wrong on this side of the trade, right? I just feel like a lot of people were off sides. The positioning actually flipped very bearish per Goldman Sachs here at lows on the S&P, which obviously results in a difference in the skew and a change in the skew under very high volatility where Vega completely cooks out those premiums, and that's whenever you have the charm and Vana effects coming into the market that are going to propel price back to the upside and give a really supportive dealer hedging type of environment here for Vanna and Charm to then, carry price through. And I still think they have cooked premium really badly here as positioning got quite heavy throughout these lows rather than at the highs. And I think those effects are going to take place. Obviously, the April 17th chain was one where a lot of the exposure was within the market, but May 16th, I still think there is a little bit of room. So we'll see what goes on, guys. I really don't have much more of an explanation here today on everything going on in the market. It's more or less just me talking about what I'm looking at from a directional perspective, and it's quite hard to kind of get a direction, but whenever you really just break down the chart from a simple point of view and you look at the chart, you look at the room for the upside, you look at the targets for the upside, you look at the risk levels in case you're wrong. It's the side that I would much rather trade on than the short side, forcing things, expecting lower lows to come that are just, in my opinion, going to be hard to trade through. I feel like the upside trade could be a lot more smooth. But my main focus is protecting the April 7th through April 9th win on the swing trade, on the TQQ trade, on the TSSL, or no, TSLL, and NVDL, all those leverage ETFs. Really nice environment back throughout that time to be able to trade the long side. And now we're getting potentially like a fourth opportunity on the table here. So we'll see how things go. Obviously, right now I have a May position for longs, and we'll see how that works out. But yeah, I don't have a ton of risk, and like I said, more focus on protecting the win from April 7th through April 10th.